Hello and welcome to Morning Trade with Money Control. I'm Mtar Techand and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends to watch out for, and most importantly, your queries during the course of the show. So keep commenting on our live feed and we will have it addressed by our expert on the show. If you have any query, do send them in to us with the hashtag AskMC and we will have them addressed. But before we get our guest on board, let's take a look at what the global handover is looking like this morning. US Fed hikes interest rates by 75 basis points to take the Fed funds rate to its highest level since 2008. Stocks sell off as a hawkish Jerome Powell suggests that the fight against inflation is far from over, warns that the ultimate level of interest rates will be higher than previously expected. Asian markets kickstart the day on a subdued note as investors digest comments from the Fed chair. SGX Nifty hints at a triple-digit cut for the Indian markets. And stocks in focus today are JK Paper, Mtar Techand RVNL. Well, the top story at this hour is the 675 basis point hike by the US Federal Reserve. The chairperson has said that there will be more hikes coming in, but the size of the interest rate hike will be debated at the December meeting. Let's listen in to what he had to say.
I don't have any sense that we've over-tightened or moved too fast. I think it's been good and a successful program. That we've gotten this far this fast. Remember though that we still think there's a need for ongoing rate increases, and we have some ground left to cover here, and cover it we will. We'll want to get the policy rate to a level where it is where the real interest rate is positive. We will want to do that. I do not think of it as the single and only touchstone, though.
Well, we're now joined by Jeff Dennis, who's an independent emerging markets commentator. Well, Jeff, good to have you on the show. The Fed has hiked rates by 75 basis points as was being expected, but Powell has dashed all hopes of a pivot. However, he said that the Fed will consider reducing the size of hikes at the December meeting. How are you reading into these comments?
Oh, I think the Fed was very confusing today, frankly. The statement was pretty dovish because it certainly introduced the possibility that you might get a slower pace of rate hikes in December. And of course, they talked about the cumulative effect of monetary tightening, which I think is important because we know that monetary policy acts with the long and variable lags. So that did suggest they wanted at some point to pause, to wait to see how the policy would play itself out. And then we had Powell suddenly saying in the press conference that the terminal rate would be above 5%. We're going to see, it's too early to talk about rate cuts ending. And it is, as your clip has just said that, he wants to get real interest rates into positive territory. So that obviously worried the markets. And therefore, I think there's a very, very confused message out of this, frankly. And clearly what's going to happen between now and December, which will be very important, is we get a lot of data. And when we see that data, especially on inflation to a certain extent on the labor market, we'll have a better idea of what the Fed's going to do. But frankly, the Fed is left everything very confused, I think, as a result of today.
Right, Jeff. Powell has also said that the ultimate rates will settle in higher than what was being expected earlier. Market participants are expecting rates to go to somewhere around 5% or thereabouts. Would you concur with that view?
I don't think they're going to be any higher than they would have been 6 weeks ago at the last Fed meeting. Because the view I have is that inflation is going to fall nicely between now and the end of the year. From here on, October, November, December, we have the CPI data for those months. We have much easier comps with a year ago in the sense that inflation monthly in those 3 months a year ago was quite high. And so inflation is going to start to come down, probably to 7 to 7.5% by year end. Also, the economy is clearly slowing. Q1 and Q2 were negative growth. Q3 was positive, but really driven by inventories and net exports, which is no real help over the long term. Consumers slowing, housing slowing, investment slowing, global economy slowing, which means you can't rely on net exports forever. And therefore, I suspect that unless you get further strong growth in the labor market and strong inflation data, wage inflation data, that the Fed will be getting ready to slow down in December, And I still think that the terminal rate is going to be somewhere around 5, as opposed to being above 5, which I think Powell introduced today. So again, there is no basis for what Powell said today, suddenly changing the terminal rate from around 5, just below 5, to just above 5. We don't know. We got to find out what the data looks like when we get there. And I think for me, the data is very important. And I think it's going to get better over the next 6 weeks before the next meeting.
Right. Chris Wood of Jefferies believes that despite high inflation and recession fears, there is a possibility of a year-end rally on Wall Street. Do you also believe that that is possible?
Correct. I absolutely do. And this is why I was very disappointed with what happened today, because my scenario for a long time has been when you get to the point where the Fed starts to slow down, I refer to it as tapering the rate hikes. Yeah, then they start to taper. Then you've got some visibility about when they will stop. I believe inflation in the US will be between 4 and 4.5% by the end of next year. And there will be visibility about that in early 2023. The Fed's probably going to stop by the end of the first quarter of 2023. And I think unless earnings are really terrible, I think that will give you a rally in the bond market and a rally in the equity market. It'll give you a weaker dollar, which will, of course, also help emerging markets. So I don't know whether it'll happen between now and the end of the year, but I do know for sure, at least that's my view, is that you'll have a much stronger equity market in 2023 as we anticipate the peak in Fed tightening, or the end of Fed tightening, even if the economy at that point is very weak, even if the economy is in a recession, because I don't see it being a deep recession. Any additional recession we get from here, I still think will be mild. And therefore, I think we are on the cusp of better equity markets. But what Powell has done today is push that back into the future a bit.
Right. Well, thanks a lot for taking out time and joining us this morning, Jeff, and sharing your thoughts with us.
Yeah.
And moving on, let's get on board our technical expert for today. Nilesh Jain of Centrum Broking is joining us. Good morning, Nilesh. We've seen the Fed hike interest rates by 75 basis points. SGX Nifty this morning, in fact, looking pretty muted. In fact, it is actually indicating or signaling a triple-digit cut on the Nifty. But last I checked, it was still above that 18,000 mark. Do you think Nifty will defend that 18,000 mark in today's session?
Very good morning to Nandita. Well, see, if you look at the event that has already been passed and 75 basis point, which was already been discounted in our market as well. But the commentary was slightly on a stronger note, and that indicates that going forward there will be another hike that is very much expected. So market is certainly reacting on that particular commentary. Looking at the overall structure of the Nifty, we believe that if at all we see any gap down opening below 18,000, that will be certainly adding some sort of a pressure. Reason being, we also have RBI monetary policy meet today, and we also have weekly expiry. So multiple events are still lined up. And looking at the overall structure, we believe that if at all Nifty sustains below 18,000, then there will be possibility of another 100 point on the lower side. And 17,800 to 17,900, that is a sort of support area. Reason being, there is a big gap that we have recently witnessed. So that gap area is likely to act immediate support. And we believe that if at all we see any further correction, that could be a good opportunity for fresh entry. Avoid taking any contract for the day. Wait and let the event pass. On the higher side, 18,200, if at all Nifty breaches that particular mark, then certainly we'll get some more comfort, and further short covering is expected above that towards 18,500 to 18,600. Lastly, one thing it is important to highlight: volatility index India weeks. Yesterday, for the second consecutive session, we have seen jump in the IVs, and it has reached 16.5, although it looks very much in the comfort zone, but there could be possibility of some sort of a spurt in the today's trading session, looking at the major event ahead.
Right. Let's now shift focus to some individual stocks that may hog the limelight in today's session. JK Paper, well, that's the first one on my list, and it has come out with spectacular earnings. EBITDA has jumped 130%. Profit has surged over 174% on a YY basis. Now, if you look at the stock, it has doubled on a year-to-date basis. Do you expect the stock to continue its uptrend going forward?
Well, Anita, if you ask me one preferred bet from the paper space, that would be certainly JK Paper. I'm, very much positive on this particular counter since a long time. And this, if you look at the technical structure as well, it is constantly making a high top and high bottom formation. The overall structure hints that we may see the levels of 440 to 460 in the very short term, and positionally in next 1 year time frame, we can expect it to surpass the 500 mark as well. So overall structure technically looks positive. Fresh entry can be done on declines. The major support is placed at 380 levels. One can add in a staggered manner, and this continues to remain a preferred bet from the paper space.
Right. Next up is Jindal Stainless. It has seen a decent run up in the last 1 month, but if you look at the earnings, profits have fallen over 60%. Revenue growth, however, has been in double digits. It's the high costs that have impacted profitability in the quarter that has gone by. Now, the stock has seen, as I mentioned, a decent run up in the last 1 month. But do you think because of these weak set of earnings, the uptrend will be snapped and it will trend downwards going forward?
Well, if you look at the overall metal space, we have seen, no doubt, we have seen some sort of upmove in last couple of weeks now. And given the fact that run-up has already been witnessed, some sort of profit booking which is very much likely in overall metal space. And looking at the dollar index, where we have again witnessed a resumption in the uptrend after testing the lows below 109.5, it has again reached the levels of 112. So that is certainly not a positive sign for the commodity space. And we may see some consolidation. I'm not expecting any bigger fall in the metal space, but some consolidation cannot be ruled out. And during this consolidation, I believe that one should focus on aluminum space, specifically counters like Hindalco and Vedanta, that is also looking positive on the chart. So these are the two particular counters that we are liking. If you look at JSPL, Jindal Steel, certainly technical structure no doubt looks positive, but risk and reward is not favorable. So better to wait for some sort of a decline and buy below 450 with a stop loss below 430, and upside is open for 500.
Right. The next one on my list is Mtar Tech. Now, the stock hasn't done that well on a YTD basis. It has reported its earnings yesterday. Profits have jumped 30%. What do you expect this counter to do going forward?
Very sluggish move we have seen in this particular counter, and volume is very dry. We hardly see more than lakh sort of volume. And looking at the consolidation that we have seen in last couple of months now, I believe that the consolidation is likely to continue. I would rather wait for a breakout above 1730, that is 100 point on a higher side from the current market price. And that breakout will certainly give me more confidence for the upside target of 1800 to 1850. But as of now, it is better to avoid, and those who are already holding can keep a stop loss below 1550.
It's better to avoid Mtar Tech at the current juncture. Last stock on my list is RVNL. Now, the stock has given 10% returns in the last 1 month. LIC has offloaded somewhere around 2% stake in the company, and the stake has now come down to 6.7% versus nearly 9%. Over 10% return in the last 1 month. What is the way forward on the charts for this one?
Well, Anita, very strong chart pattern we can see on the technical front, and if you look at the past 1 year time frame chart, the stock has formed a big rounding bottom formation, and the breakout is placed at 42. And recently we have seen stock has tested the 42 levels, and we have witnessed some sort of a distribution at the high level. So I would rather wait for a breakout above 42 for more upside towards 50 to 52. So another 20 to 30% upside can be seen going forward, but for that it needs to break above 42. Those who are already holding can continue to remain long, and stop loss should be placed below 37. Fresh long, I would say, can be still initiated if at all the stock corrects and reaches the levels of 39 to 38. So that is the buying range for the RVNL, and the stop loss should be placed below 37. Immediate target could be 42, and a breakout above 42 will open upside for 50 to 55.
Right. Nilesh, HDFC will be reporting its numbers today. I wanted to understand your view on where the stock is headed from here. How is the chart setup looking for this one?
Well, HDFC Limited, being index heavyweight, it is certainly will give the direction to the market. But looking at the technical structure, it hasn't done quite well. And if you look at the major structure, that continues to remain on a positive side. Short-term structure looks slightly sideways. But I would rather, advise to buy on decline, advise to go long from a long-term perspective. still has a good potential to go towards 2900 to 3000 from position perspective. Although there were certain corrections that we have seen, and stock did not, haven't done quite much well on the short-term time frame. But looking at the position target, we are still very much positive for 2800 to 33,000 sort of target from next 6 to 8 months perspective. And if at all we see any decline towards 2400 to 2300, that could be a good opportunity. One should better wait for result to span out, and the post that can be bought for a position target. Stop loss should be placed below 2200.
Right, let's now shift focus to all the queries that have been trickling in this morning. The first one is coming in from Naveen, and he wants your views on the sugar pack. Which of these sugar counters like Balrampur, Chini, Shriram, Shri Renuka, which of these are looking attractive at this juncture?
Well, from sugar space, we have been bullish on Renuka Sugar. Looking at the overall major structure, that counter has given a good has formed a good rounding bottom formation, and it seems like it is likely to come out from its 12-year consolidation range now. And the structure looks very much positive, can be bought at current level and on decline. It is better to add on multiple branches, and the upside is open for 70 to 75 from a position perspective. On immediate basis, we can expect this counter to move towards 66 to 68. And technically, it has formed a good double bottom formation at 54. So that should be the level that one can keep a stop loss below the same. And from position perspective, 50 should be the stop loss. I think it's a good counter from sugar space, can be added for a positional bet.
Okay, the next one is coming in on Divi's Lab. Sushant Vanmali has written in, and he wants your view on the counter. Now, the stock was under pressure yesterday, but over the last 5 sessions or so, it has given a returns of somewhere around 5% or so. So, would you believe that yesterday was just a one-off and that the stock is headed higher from current levels?
Well, if you look at the correction that we have seen in last 1 year after testing the highs of 5,300, the stock is still available at 3,800. So the stock hasn't done quite well. Although recently we have seen a good spurt from 3,500 to 3,800. Yesterday we have seen some profit booking. The structure indicates some broader consolidation. It may take some more time to give a positive return. And I think if somebody is planning to initiate a fresh long position, one should better look out for Sun Pharma, where we are getting more comfortable, and the upside is open for 1150 to 1200 from a positional perspective. And buying a staggered manner, so Sun Pharma is one counter that we are liking. As far as Divi's Lab is concerned, if somebody is already holding the long position, can continue to remain long. 3600 should be the stop loss. 4000 is the immediate level that one can expect. From positional perspective, we believe there will be some consolidation, broader consolidation, and 4200 to 4300 could be the 1 year target.
Right, 4,200 to 4,300 would be the 1 year target. Moving on to the next one, this one is coming in on Intellect Design, and P. Vishwa has written in. He says that the stock, he actually wants to know whether the stock will move up from current levels. Now we know that this stock has been stuck in a downtrend for the most part of the year. So do you think this will move higher from here, or the correction is overdone?
Well, Anita, recently the counter has posted numbers, an extremely poor set of numbers we have seen for the second consecutive quarter in a row, and that certainly is reflecting in the chart as well. The stock has corrected after making highs of near about 1,000, and now it is available at almost 400 levels. So 60% correction we have already witnessed from the high levels. We are certainly not getting any comfort in this particular counter to take any contra bet. Better to avoid taking any contra bet. And if you look at the broader structure, it has also given 1.5 year consolidation breakdown. So breakdown came at 550 level. So that should be the level to be watched out for. As long as it trades below 550, we believe the downside is still open for 380 to 360. So I would suggest better to avoid taking any contra bet. And if somebody is already holding the long position, then keep a stop loss below 380.
Better to avoid Intellect Design at this juncture. Next one is from the cement pack. Kishore B has written in, and he has a query on JK Cement. Now we know that the entire cement basket has largely disappointed when it comes to the second quarter earnings on the back of higher costs. But what about JK Cement? The stock has been in a steady uptrend over the last 6 months or so. So do you think this will outperform the rest of the cement stocks?
Right, Anita. So we have seen a good up move after making the lows and testing the lows near about 2000 levels. and the stock is certainly witnessing a strong pullback, and it seems like a trend reversal as well. So I think the technical structure looks positive for upside levels of 3200. One may have to wait for another 2 to 3 months, give some time to 2 to 3 months, and one can remain long, and stop loss should be placed below 2650. So that should be the level on the lower side that should be one can keep eye on, and the structure looks positive.
Now, next query is coming in from Akshay Gujarati, and he says that he's holding shares of SAIL and NALCO for the past 1 year. And his returns are down somewhere around 25% as of now. What should he do?
See, overall metal space, we have seen a correction in last 8 to 10 months now. But these particular two stocks, they have underperformed given the fact that from PSU space they are coming. And we still believe there will be this sort of underperformance may continue. And looking at the reversal that we have already witnessed in the counters like JSPL, Tata Steel, JW Steel, so we are getting more comfort out there. So it is better to shift your position to another metal counters like Vedanta or maybe Tata Steel or JSPL, where we can expect a good return compared to this PSU metal counter. So as far as levels are concerned, from Steel Authority, 85 is the level, that is the breakout level. And going forward, you may have to give some more time. If you have a time horizon of, let's say, 1.5 years, then you can continue to remain long on these counters. And as far as the NALCO is concerned, see, similar sort of structure can be seen in the NALCO. And 71 is the current market price, and 66 should be the stop loss. Upside is open for 78 to 80.
Right. The next one is coming in on Adani Ports. Just 1 second. The next one is on Adani Ports. Harish Yadav has written in, and he wants to know whether he should hold or sell this stock.
We have seen numbers recently, and the stock has reacted slightly on a negative side. But if you look at the position structure, that looks slightly on a positive side. One can keep a stop loss below 800 and remain long for the upside levels of 860 to 880. So that's the immediate target that one can expect. Although we don't have any major upside target in this particular counter, since looking at the volatility that usually we see in Adani Group. So it is better to take any long-term bet in this particular counter and move out as it reaches to 860 to 880 mark.
Right. The next query is coming in from Mr. Amit Roy, and he wants to know about IT stocks like Infosys and Tech Mahindra. Infosys reported a steady set of numbers, but Tech Mahindra lagged its larger peers when it comes to quarterly earnings. But these stocks have been beaten out of shape in the wake of recession fears in the US. He wants to know whether it is the right time to buy after the kind of hammering we've seen on these stocks.
Well, I would say slightly, you are late because we have already seen a base formation near about 1350. So unless and until you have a time horizon of, let's say, 2 to 3 years, then it's a good time to buy. But the concern are still persist in the US market, and there may be possibility of a demand slowdown going forward. So looking at these factors, one should have a view of 2 to 3 years in the IT space. And again, I would say buy in a staggered manner. Infosys continues to remain our preferred bet from the IT pack, followed by HCL Tech. So these are the two stocks that we are liking. I would suggest to avoid Tech Mahindra for the time being. And it is better to wait for a breakout above 1200, or maybe wait for some sort of clarity in the coming quarter. And yes, Infosys, one can remain long and buy in a staggered manner along with HCL Tech.
Right, avoid Tech Mahindra at the current juncture. That's the call coming in from Nilesh. The last query for today is coming in on LIC. Abhilash has written in, and he wants to know whether he should hold or sell the stock ahead of its earnings.
See, LIC after listing, we have seen a continuation of the lower top and lower bottom formation, and we have witnessed a good sort of decline. I think it's good to hold on to. And looking at the technical structure, it seems to have formed a short-term base near about 590, 600 mark. And we have in our coverage as well. So upside is open for 650 to 700 on immediate basis. If you have a time horizon of more than 1 year, then it's a good bet to be into. And if at all post numbers, if you see any correction, so that could be a good opportunity to make a fresh entry as well.
All right. That wraps up our query segment for today. But before I let you go, Nilesh, what are you recommending for our viewers this morning?
Well, for the day, we have one long bet that is on Bata India. Looking at the recent upmove that we have seen in this particular counter, it looks like it is heading, it is on the verge of a major breakout from a falling channel pattern that breakout is certainly placed at 1870 levels. Although looking at the correction that we are going to witness in today's trading session, it's a good opportunity to get into Bata India, and stop loss should be placed below 1825. The upside is open for 1920, and positionally we believe it is heading towards 2000 mark as well.
Well, Bata India is the call from Nilesh for this morning. Well, with that, thanks a lot for joining us this morning, Nilesh. I hope to have you back on the show sometime soon. Well, with that is a wrap on this edition of Morning Trade. But coming up next is Markets with Santo and CJ, so don't go anywhere and stay tuned.